Now, speaking of long-term investments, let's talk about the stock market crash from last week. Wow, what can I say? What can I say? Stock market crashes are a great thing for those that are prepared, educated, and have cash on the sideline ready to invest. This is where you create generational wealth if you know what you're doing. Not only have we been reading this like a book, we picked the top again on the S&P 500. We picked the lower highs. We've taken out all of our targets. We took out the last target there, the $5,000 target I gave. I think that was only yesterday or the day before. So now all my downside targets have been taken out. Now, what does that mean? That means that on the S&P 500, the largest stock market indice in the world, market cap of around 50 trillion, probably 40 something now. I'm not sure, to the exact dollar, but it's a huge market and it represents great opportunity when you can get it on a discount, the same price that it was in 2021. If I said to you before the stock market crashed, if I said to you guys last week, if I can get you 10,000 shares of the S&P 500 at a price we saw 4 or 5 years ago, would you take it? What would you say? 100% you would take it. And so, why don't people take advantage? Because when they see, when the crash is occurring, it's scary, right? It's emotional. A lot of people lose a lot of money. There's obviously always more room for more downside, and you don't want to get stuck catching that falling knife, as we say in the industry. But at the end of the day, it comes back to that thing like, do we look at past market data and make logical decisions? Or do we look in the moment and make emotional decisions? For me personally, I know that every single market crash has come back and made all-time highs within 12 to 24 months of a crash. So I use the data, I make logical decisions, and I don't make emotional ones. And sort of, when you're talking about long-term investments, you need to really just sort of set and forget. And I know that 1-2 years from today, what's the date? So we can go on record. It's the 8th of April. It's 11 p.m. Australian Eastern Standard Time. The S&P 500 is currently trading at $5,000. And I believe 2 years from now, the S&P 500 will be trading significantly higher than $5,000. So if I know that, then I don't need to be emotional in the moment and make an emotional decision when I can look at the data and make a logical one, understanding we're going to make all-time highs in the future. So right now you can get it at, yesterday you could get it at pretty much the same price. You could get it at 2021. This is the 2021-2023 all-time high, and this is 4,800. Look at, again, past data, not emotions in the moment, but past data. Every time we break that 50-week moving average, we come straight down to this red 200-week moving average, right? And even here, there was obviously a deviation, but even over here, same sort of thing. We break through it, we come down. We break anything, we break through it again. We just like it was a deviation. We come back above it, like. So it's not every time we sort of come back up again, resistance, come back down to the 200-week. I just use these 50 and 200-week moving averages so that once and you can see here, like, look how quickly, once we broke that that 50-week moving average, how quickly we then came back down to this 200-week. We're almost there. So if we look at this from a data-driven perspective and go from the bottom of yesterday's candle, we're only 3% away from the 200-week moving average on the S&P 500 weekly chart, which when we look at data, represents one of the best value areas to get into the market. Wonder what this one was actually. Let's go from when we broke it to when we made it, 18%. And right now, when we broke it, look at that, 18%. Very similar. So, for me, I mean, it's not rocket science. I just keep it simple, stupid. A lot of people overcomplicate it. People that overcomplicate it don't necessarily make more money. Personal opinions only, not financial advice or general financial advice. But
Cell 114.
You can sort of see how this works. Every time we break it, again here, we broke it, we came back down to the 200. Does this make sense? Can we move past this? and keep going. Hopefully that answers your question too, Tom.